I have two questions for you. Firstly, trade seems to be the order of the day or the order of the week. What do you think about the prospects of a potential trade war between the US and the EU, and does that seem more or less likely since the start of the year? And secondly, I'd like to hear your reaction to Sweden ending its experiment with negative interest rates, and whether you think that markets, assuming you don't have the potential to cut further, and they're signaling that the next rate rise will be upwards rather than downwards, are they correct in that assumption?
So that's three questions in a row. Okay, on the trade front, I think you're quite right in signaling that trade is actually an important element in our considerations, and particularly in assessing the downside risk. I think one critical development since our last meeting in late December has been the conclusion of phase one of the negotiations between US and China. And that in and of itself has a variety of consequences. It has consequences in relation to uncertainty. It certainly has slightly reduced, if not vanished, but it also has consequences in terms of international trade at large and indirect consequences for those regions or countries around the world from which trade will be diverted in order to deliver on that phase one. So this is something that our teams are looking at very carefully to assess exactly what will be the impact on a net basis for the euro area. In terms of the trade relationship between the US and the EU, I took some comfort from the meeting that was concluded a couple of days ago between the President of the European Union Commission, Ursula von der Leyen, with the President of the United States. And while we all know that the results of those meetings are preliminary, the tone and the determination on both sides to draw positive conclusions from that meeting and to indicate determination to pursue the negotiations and the approach to the trade relationships between the EU and the US, I think is to be taken as a positive signal. I know that the President of the Commission will be visiting the United States in February. I would expect continued work to be ongoing between the parties by then, and hopefully some positive developments out of that February visit. But clearly we're going to monitor that very carefully and see what the signals are with due consideration for the limitation of signals relative to what the outcome of final negotiations can be. In relation to the setting of rates, in particular by Sweden, I think I'll leave it to the Swedish Central Bank and to Stefan Ingves to actually indicate on what ground, for what reason, there was a determination to actually return, for the moment at least, to a zero interest rate. My understanding of his conclusion is that there had been a positive outcome of that period of negative interest rates, and drawing from that, and given the economic circumstances, the inflation expectations, it was legitimate and their decision to actually return to the zero rate where they are at the moment. Every region and every country has its idiosyncrasies and rational, and I think comparisons in that respect are odious, as we all know. Clearly, everybody's going to look at what conclusions are drawn from that monetary policy reversal, if you will, in Sweden. But I wouldn't draw any conclusion as far as our policies are concerned. And as I said very clearly, I think in the introductory statement, the Governing Council is going to be very attentive to any and all developments in all directions, both in terms of growth, but obviously in terms of inflation, which is our measurement of price stability, and we'll take whatever measures are necessary as appropriate in order to respond to our imperative to deliver on our mandate of price stability.
Mr. Sims?
That was a bit of a long-winded one, but you had 3 questions in one, so it had to be long.